In this video, we are going to be analysing Mullen, ticker MULN. Is down 7.5% on the day, and one thing I always want to note is whenever analysing a stock like this, look where it was a year ago, $16, down to a 52-week low of 21 cents. Whenever you're trading this, again, always be cautious. It can get worse. Don't think because now it seems it's 20 cents, oh, it's cheap, it can't get any worse. Yes, it can. If it falls 5 cents, that has a big impact on the stock price. I mean, from 20 cents to 15 cents, that's a 25% loss. It only moved 5 cents, but you still lost 25% of your trade. So yes, do be cautious of it. Yes, it may be 21 cents. It can always get worse. They could always declare bankruptcy. Anything could happen. So again, always be cautious. Just whenever you're holding a stock like this overnight, big news can come out overnight. Always be prepared to really lose everything you have in it. If you're holding overnight, obviously day trading, then that's fine. You're going to be in and out. Maybe if you're hedged, it does have options. So maybe if you're hedged through the options, fair enough. But if you're holding this just straight out shares, either long or short, always be cautious. Anything can happen. And why I say short as well, again, with something like this, I would usually be more bearish on it. But again, I would never short a stock like this just with shares, because who knows what news will come out. Yes, this stock has sold off so much, but it also means it can move up very quickly. So if you're shorting shares, again, I would always want to be hedged at the minimum with at least some call options. Or again, if I am trading it short, trade it with options. By that I mean buying the puts instead of maybe selling them. But again, just things to be cautious when trading stocks like this is, yes, it can always get worse, but also don't think it is always going to get worse. If you are trading at short buys, again, be prepared, because again, it could spike. Even look at that move we had recently. If I go back to this chart, doesn't look big on the long-term chart, but going from 21 cents to 61 cents, near enough a 200% gain. If you were shorting that, again, could have been in trouble. Be prepared either way you're trading this. Doesn't matter which way you are looking to trade it, just be prepared. Now, onto the key levels of what are we paying attention to. So, what I will quickly do first is provide you the key levels on the longer term time frame, but we can see these levels are very far off, so we will quickly go into a shorter term time frame after. So we have the two key resistances at 78 cents and $1.30. These are our two closest and key resistances, and we have a support, and our only support at 8 cents. So these are the longer term levels. These will be the strongest and highest probability trade opportunities. But I know not everyone is going to want to wait for these kind of levels, and you may want to be getting in sooner, or maybe you're in now and you want to be knowing where to maybe put stops and targets. So this is the longer term outlook. These are going to provide you the highest probability trades, but if you're trying to trade it on a shorter term basis, maybe you're a swing trader, you're already in a position, or you're a day trader just looking for some intraday targets, what can we pay attention to in the near term? So we will use a 30 and 90 day chart to give us levels closer to where we are now. So we are currently sitting on a support. Now this is going to be key to watch. On the 30 day, we are sitting 26 cents is our first deviation support. So we have bounced off this. Again, that would have provided the original trading opportunity. We have to come back to retest this. Again, may get another bounce, but otherwise what you're going to be waiting for is a break below this level, come back to retest as a resistance, and if this level goes to weak again, we have a target of 17 cents. This level is going to be key. Second deviation on the 30 day, but also statistical mean on the 90 day chart. So that would be a key target, and really past here I'd be a bit more cautious, trading it long until you hit at least 8 cents, and the reason for that is between 6 and 8 cents. That's our long term for whatever one that was. Actually, we can go back and check. On the longer term, that was our statistical mean, but going on to the shorter term, it was also our third deviation. So again, this is going to be a key layer of support if we fall that far. Again, still very far from where we are now, but definitely possible. Now, on the other hand, if you're more bullish on this, what are going to be your targets? So again, we keep having this zone of what kind of zone you can just pay attention to this as. What you're waiting for is really a breakout or breakdown from this level. If you break down, again, target's going to be 16 cents. If you break out of it, we have a target at 36, may not provide you enough upside opportunity, so you may be looking to see if you can hold through there to the 43 and 45 cent target. If we break that, we do have final levels taking us to 55 cents, 65 and 70 cents. So again, a lot of levels here. Do you need to pay attention to all of them? No. If you just want to be paying attention to where you are now, 26 cents, you can just pay attention to the two closest levels. What's going to happen at 26? If we break it, we have a target of 16. If we can hold it, a target of 36 cents. So all you need to do, pay attention to where we are now. Again, we just provide you these further out levels so you're more prepared, and even if you're watching this video, you know, a week or a month down the line, you have levels to focus on. Anyway, I hope you enjoyed the breakdown on Mullen. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.